The best big tech stocks to buy now. What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the clothing line to prove it. And today we're going to be speaking about some big tech companies. 3 companies we're going to speak briefly about today. Okay, we have Apple stock, we have Facebook stock, and we have Amazon stock. All companies that I own and all companies that I absolutely love and I've spoken about on the channel before. Some of the most profitable companies in the world, some of the most established names in the whole world. Just absolutely incredible companies. A lot of which have gone up in value massively as of late. And so what I want to speak about today is whether or not I still think that these are good buys at current prices, if I plan on buying more, or what kind of price points I would plan on buying more. Because although I do really love my EV stocks, big tech is another industry that I absolutely love, and it's the industry after EV where most of my money is. It's just one of those ones you can't go too wrong investing in some of these companies. When you start looking at the stock charts and the balance sheets and the future prospects, it would be so hard to lose money in these companies. So right before we do get into it, guys, can I please ask you, do hit that juicy like button. If you're new around here, hit that juicy red subscribe button and join the family. People completely free. And please do drop me a comment down below. Let me know what you think of any of these companies or any other big tech companies you like. Also, guys, Discord launched yesterday. We already have over 500 members in that channel. If you want to get involved, click the first link in the description. If you do sign up to Patreon, you will be the first one to know when I am buying or selling my stocks. And there is loads more you get with that as well. But anyway, guys, into the video. So guys, we're going to start it off with Apple, because these are the guys that most people are speaking about right now. We very recently had our stock split. We're at all-time highs. It's been an incredible run. If we look on the 5-day chart, we can see that yesterday we went on a sharp little dip. Okay, we went from $134.88 all the way down to $128.75, and we closed the day at $131.40. Now, if I bring you to the monthly stock chart with Apple, okay, we're actually up 20%, which is absolutely amazing, especially considering the fact this is Apple, guys, okay? One of the most well-established brand names in the world, a market cap of $2.25 trillion. I mean, we can't even comprehend that number. That is insane. And they went up 20% in the last month. If we go to the 6-month chart, we're up over 80%. And if we go from the very bottoms of the 6-month chart, we're actually up over 130%, people. And if we go all the way to the 5-year chart, okay, we're up 380%. On the 5-year chart, there's been 3 relatively considerable dips. One of them obviously related to the pandemic. But it has absolutely always bounced back to insane new highs. So Apple has without a doubt turned into one of my favorite big tech stocks. I own 12 shares right now at a cost basis of $91.21. So, you know, we're doing decent. But to be honest, guys, I want to buy more, okay? And that's kind of where the inspiration for this video came from. Do I think it's okay to buy Apple at these price points? And the simple answer is most certainly yes. I most definitely do. And I think if you have plans of holding Apple for a long period of time, I don't think you should be worried at all about buying at these kind of price points. I mean, even go back to the Max stock chart, and if you are willing to hold this company for any considerable period of time, the odds of you losing money are very, very low in my opinion. Firstly, guys, let's have a look at the balance sheet, okay? Cash, we have $33 billion in cash. Cash and short-term investments, $93 billion. Total current assets, $140 billion. Total assets, $317 billion. Current liabilities, $95 billion. We're in a fine position, a great position. Total liabilities, $245 billion. Like, I mean, the ratios add up, people. Fantastic balance sheet. And one more thing, guys, okay? Apple is now more valuable than the entire FTSE. And if you don't know what the FTSE is, it's the index of the 100 companies listed on the London Stock Exchange with the highest market cap. Apple is more valuable than all of them put together. That is how big this company really is, people. So what's the reason for this dip? Well, I mean, I expected this to happen. I did say it probably a week or 2 ago when we were speaking about Apple's stock split. Usually what happens is a stock split, we get a little bit of a run up, which was happening. It did happen with Apple. Then we get some sort of a pullback, and this could go on for another day or 2. We get at some sort of a normal level, and then we'll just go back to our steady growth. To be honest, guys, I do expect to buy some Apple either this week or next week. And to be completely honest, the price does not really matter to me right now. As I said earlier on in the video, the longer a time frame you have with this company, the more likely you are to make a decent amount of money. And again, I just love Apple and their products, and it's always easier to invest in a company when you use their products. I use iPhones, I use a MacBook. I'm actually about to buy a new MacBook because this one's getting so slow because I've had it so long. And you know, I gotta be able to make the videos for the YouTube people. I'll probably buy a new phone either this year or next year. it's gonna be an iPhone. It is that simple. I think Apple has a brand loyalty that not a lot of people do, and there's always this level of excitement with Apple because you know there is always a new product just around the corner. So do you have to wait for a big dip in Apple to get involved? I genuinely do not think so whatsoever. I mean, on the 6-month chart, people might have been waiting for a big dip for a long time. They wouldn't have got one till up here at $92. And since then, there hasn't been a big dip, and we're all the way up to $131. A lot of the time, if you're trying to time the market, you will lose. But anyway, that is Apple, and that is definitely one of my absolute favorite big tech companies right now. Okay, now we're having a look at Facebook, people. One of my absolute favorite companies in the world. And like with Apple, the longer you hold on to Facebook, I think the more likely you are to make a considerable amount of profit. Am I willing to buy at these prices? Yes. Yesterday, I bought 1.5 shares at $297 a share. I think that makes it quite obvious that I'm willing to buy even at these prices. The very first time I bought Facebook was at about $205 a share. And I have bought the whole way up, people, and I will continue to buy up. Right now, my cost basis is around $240 a share. And again, if I just show you the 6-month chart, okay, we're up 62%. If we go from the bottom, somewhere around here, we're actually up 107%. Again, we go back to the 5-year chart. You know, there's some choppy moments, but ultimately we're up 228%. It's another one where I don't want to try time this. You know, if I plan on holding this for 5, 10, 20 plus years, am I really going to care if I buy at $300 or $280? No. Now, with that being said, would I absolutely load up if we got a considerable dip? To be honest, yes. Facebook has seen 5 to 10% up moves and down moves quite often over the last while. And I mean, if I ever see Facebook touching off $270, $260 a share again, that's probably when I would actually, you know, buy a considerable amount of shares. Let me just show you the juicy balance sheet that Facebook has, okay? Cash, 21 billion. Cash and short-term investments, 58 billion. Current assets, 68 billion. Total assets, nearly 140 billion. Current liabilities are only at 11 billion. Current assets are 68 billion, people. This is literally one of the best balance sheets in the world. And it's gotten better and better. And total liabilities of 29 billion compared to nearly 140 billion. I mean, guys, come on. Absolutely amazing position to be in. They own Facebook, obviously. We have WhatsApp and we have Instagram. They are 3 social media services that nearly everybody in the world who has internet access uses on a daily basis, at least one of those services. And I mean, social media is only getting more and more popular every year. I could show you a million different graphs to back up that fact. It's just another company, guys. I don't care what happens on a weekly basis or an intraday basis. I've seen them get attacked multiple times in the media and see decent dips, and I've seen them shoot right back up in less than a week. I think the large majority of the time, if you try to time this company, you're just going to end up missing out, people. Facebook is definitely one where I just plant the dollar cost average into pretty much continually, and if ever there are big pullbacks, I will load up, baby. One more thing I'd like to mention really quickly is this. Facebook is the 3rd most popular stock among hedge funds. I mean, there's much else need to be said, guys. People who manage hedge funds, okay, are a lot smarter than me or you. Simply put, Facebook is the 3rd most popular stock in hedge funds. I mean, that in itself should tell you that if you're a long-term investor, you want to get some money into tech or big tech in general, this is going to be a good long-term bet. There was also this one article by Investor Place. Investor Place has some good articles. They have some articles I don't like at all. But anyway, keep buying Facebook stock on the dip for the foreseeable future. And what I would actually say, guys, is just keep buying Facebook stock. I mean, guys, here, right, Facebook went up 13% in a matter of a few trading days, okay? It was $175 a share. People may well have thought, wow, it's gone up so much, you know, a decent pullback is absolutely inevitable. The closest thing you got was this, -2%. And since then, it's gone up in value over 73%. I just really want to reiterate the point that sometimes waiting for a dip will lead you to losing more money in the long term than making. Now that of course is not always the case, and you should not always just buy a stock randomly, but Facebook is it's just Facebook. But anyway, guys, one more company. Oh, let's talk about Amazon, baby. Over $3,500 a share now, market cap of $1.77 trillion. On the monthly chart, up 13.5%, fantastic. On the 6-month chart, up nearly 85%. From the very lows, over 110%. 5-year chart, okay, you really want to time this company? Do you want to try time this company that's gone up over 600% in 5 years? There has been one very, very considerable dip in 5 years, and that was here, okay? Yes, it was a great dip, 30%, woohoo! We don't see that very often at all. When the Roni hit, we lost about 20% of value. I mean, it was only a matter of weeks until it had gained over 50% from those lows. And guys, this is something that you will see with an awful lot of giant tech companies. These are the most well-established brand names in the world, the most well-established businesses in the world. You don't get a $1.77 trillion market cap because people are uncertain about your company. The dips don't last long and they are few and far between. I mean, again here, we're going all the way back to 2016, but you see a 23% move up to $659. You think, no way this can last. Well, the next time you would have got a dip was never, because it went up 435% since then. I'm just going to keep reiterating this point. Now again with Amazon, quite juicy financials. Cash 37.5 billion, short-term investments 40 billion, total just over 71 billion. Current assets nearly 111 billion, total assets 258 billion, current liabilities 93.8 billion, and total liabilities 184 billion. Great position. One thing that I also personally see happening for Amazon quite soon is a stock split. I mean, we're $3,500 a share, people. People can't afford this, okay? People cannot afford to buy one full share in this company. And a lot of younger people love Amazon and use their products daily, weekly, whatever it is. I've said it on the channel before, I don't have many monthly subscriptions, but Amazon Prime is one of them. The only other one I can actually think of is for my Photoshop, and that's to make thumbnails. That's not even a fun one. Now, one thing I want to speak about in regards to Amazon is actually Netflix. This may sound a little bit weird. Now, Netflix has also had an amazing 6 months, okay? Done really well. Although from our July peaks, we're actually only up not even 1%. When there was a lot of buzz around Netflix, I openly said on YouTube that I have zero intentions of buying this company. This is definitely a stock that boomed by people having to stay at home from the pandemic. And don't get me wrong, it was an amazing company even before the pandemic. It was doing really well. I mean, on the 5-year chart, absolutely immense growth. For the most part, trading heavily upwards. Only 2 major dips. That's fine in my books. But this is a company who really benefited off of the pandemic. People being stuck at home, people being bored, people being off work, off school. A lot of people signed up to Netflix. And I think that that will stand with them for a few months, most definitely. But I think that once all is back to normal, okay, don't get me wrong, Netflix is still going to be an amazing company. They're still going to have loads of users, they'll have more users. I just don't see them being able to keep up anywhere near this same level of growth in the long term. I really don't. Now, I could be completely wrong, and I hope I'm completely wrong. I want Netflix to do amazingly, and I want Netflix investors to be really happy. The thing about Amazon, guys, okay, obviously they've benefited from this whole stay-at-home thing, but I mean, come on. They're going to do just as well after the pandemic is over as well. And Amazon does so much more than a company like Netflix, for example, that there is so much more room for growth. There is so much more room for expansion. Obviously, we have Amazon Prime. That's what everybody thinks of. We have their Amazon Web Services, their AWS. They have Amazon Video now. They have Alexa. They have other home products. They just have, in my opinion, so many more avenues to go down in regards to growth. And don't get me wrong, I don't really think any of the companies we're going to speak about today are going to be able to give you hundreds of percents every single year forever. But I do think that they offer some amazing opportunities. And that, my friends, is what I believe to be the 3 best big tech companies to buy now. I know a lot of people will argue, obviously, both Microsoft and Google in there. And I own both of those companies. Google in particular right now is just being very slow. Microsoft, I do still love the pieces. It more than likely would be the very close 4th. But anyway, guys, there we have it. So guys, I do hope that you enjoyed that video. And if you did watch until the end, as always, you, my friend, are a true legend. Thank you so much for supporting the channel. If you want to know exactly when I decide to buy or sell these 3 companies and every other company that I will ever buy or sell, hit that first link in the description box, sign up to become a patron and get access to my private Discord community, and you will know every single time in real time when I buy or sell a stock. You'll also get loads more information than just that. If you did enjoy the video, guys, please hit that juicy like button if you haven't yet. Drop me a comment and subscribe if you're new around here. All that helps me out so much. Support on the channel has been absolutely amazing lately, guys. We're like this close to hitting 30,000 subs. I appreciate you all. I hope you have an absolutely fantastic day. I will see you for tomorrow's videos, people. Peace.